So can you explain what the difference is of like a holdco to a normal corporation? Like, is it just like a normal corporation structured in a different way, or is it like a totally different type of corporation?
So that's a good question as well. Basically, an incorporation is an incorporation. There is no difference between any incorporation. The term holding company is more so where that corporation is in your organizational chart. So a operating company, like I mentioned earlier, that is where you
Mm-hmm.
hold obviously your operations of your main business. Um,
Mm-hmm.
that will be at the bottom of the organizational chart. In most
Mm-hmm.
instances where the operating company is just owned by the owner operator, there is a level up where the owner operator owns, let's say, 100 common shares of that corporation and they control it fully. When we introduce the holding company level, that is an incorporation as well. It's the same structure legally as the operating company in terms of all the laws that govern it, the rules for taxes, all of that. There's nothing different for
Mm-hmm.
a holding company as opposed to an operating company. It's more so just how we structured it. So, in the sense of a holding company, it is going to sit above your operating company. It is going to own all the common shares of your operating company, and it will
Mm-hmm.
also own, let's say, some assets. Now, you brought up a good question. Is it taxed differently than an operating company? It's not necessarily taxed differently, but the assets that it owns can produce different tax rates than an operating company. And I don't know if you want to get into that now, Ariel, or not, but
Mm-hmm.
if we're talking about just corporate income taxes on a
Mm-hmm.
very basic level, most of the time, if you're a small business, you experience a tax rate of, let's say, now it's about 11% is your
Mm-hmm.
small business tax rate. Um, if you're in a holding company and you own investments that produce investment income, you don't get to experience that 11%. You experience a much higher tax rate. It and it's a pretty complicated calculation because there's a whole lot involved. But when it's
Mm-hmm.
all said and done, what the way I break it down to my clients is you're paying about 27% tax on that investment income. And there's a lot of
Wow.
rules. Yes.
So it's not necessarily, I wouldn't say it's like you would open up a hold code just for tax savings. It's not really that. It's more for asset protection.
Exactly, but there is definitely a tax savings portion to it. And
Mm-hmm.
the main reason, and I'll tell you this now, I don't know if it's the right time in our talks, but
Mm-hmm.
I feel like we're naturally getting to this point anyways. Um, so basically, the way that the dividend system works is typically, if we're using that butcher example again, and the butcher starts
Mm-hmm.
making, let's say 100, $200,000 a year in profit after paying
Mm-hmm.
himself, his workers, all that stuff. Um,
Mm-hmm.
if he needs to get, or she, if they need to get
Mm-hmm.
access of from that money, if they need access for that
Mm-hmm.
profit, and let's say want to invest in stocks or real estate,
Mm-hmm.
without the holdco structure, they would have to pull the money out of the company, and they would pull out the money by either a dividend or a wage. That
Mm-hmm.
is obviously taxed at a high rate because if you're already
Yes.
earning a salary of, let's say, $100,000, you're getting taxed in the high percentages, in between 30 and 50%, depending on how we structure the withdrawal. So
Yeah.
imagine trying to invest in something where you're already losing 50% of your money to taxes. It's not a good investment. So what
Yeah.
a lot of the times too happens is people set up holding companies and are able to dividend all these retained profits from their operating company into this holding company, and
Yeah.
it allows them to retain that money tax free. So there's $0 in taxes on those dividends because it is an intercorporate
Oh,
dividend.
I get what you're saying. I get it now. I think you explained that really well.